is very important. This is going to save you a lot of money, okay? Like I promise, if there's nothing else you listen to, listen right now. What's going on, everybody? Today we're talking about how we can catch the exact tops and the exact bottoms with a little something called divergence, all right? Bullish and bearish divergences can help us spot the exact trend reversal so we can get in at the peaks and the lows of a price. Now, before we do that real quick, I just want to give a shout out to the Discord. Y'all been showering me with love. For those who don't know, if you don't know, get in the Discord. But for those who don't know, I've been sick for the past 2 weeks. I had a throat infection. I had a fever. I had a lot of time to watch Breaking Bad. And although it's a good show, it's not what I really want to do, is just sit in bed and watch shows. But I'm feeling a little bit better, so I'm going to try to bang this out. If my voice cracks a couple times, please bear with me. I apologize in advance. But let's get this show on the road, guys. So we're talking divergences. Well, first things first, what is a divergence? Well, a divergence is when your price is making, for example, a higher high, but your oscillator is making a lower high. Oh, I drew that horribly. A lower high, okay? This is what is called a divergence. Now, why is this important, and how can we use this to really figure out what's going on? Gio, can you please teach us? Guys, listen, patience, all right? I know you waited 2 weeks for me to come back, but I'm back. You need to have a little bit more patience. I'm getting there. All right, all jokes aside, the reason you're looking for this is because, remember, in our indicator here of market cipher B, these gray waves are momentum waves, right? So if momentum is getting lower as price is getting higher, that means that there is less commitment in the chart, right? Less people are committing their liquidity. However, price is still increasing. So by default, that means that price needs to correct back to its fair value. So let's just say this is our range, for example, and it's not strictly based on ranges, but this is just example's sake, right? So if everything within this little rectangle is considered a fair price, once price starts to come above it and your momentum is getting lower, we are considered overbought at this point, and price is likely to correct. Now, I say likely because divergences don't always play out with like single humps the way that I drew here. And depending on your time frame as well, it can get a little bit crazy. So I'm going to try to help clarify what you should be looking for, how you should be trading divergences, and really how you can use them to enter. If you've seen my Market Cipher B videos, which I hope you have, I'm getting a lot of good feedback, really good content in there. But if you've been seeing my Market Cipher B tutorial, you know that money is king. Money's the holy grail of my little indicator here. And that remains true with divergences as well, okay? So the first thing I want to point out is that you can have divergences with the waves, right? With these gray waves. You can also have divergences with, let me actually make this bigger so you can see it. You can have divergences with the waves. You can have divergences with the VWAP, okay, which is this yellow line over here, which is another signal for momentum. And you can have divergences with the money flow, okay? Bear with me here. We're going to talk about it. So let me just draw you a quick example. Here we have a lower low on VWAP. So if price is making a higher low, that would be considered a divergence. Now, when you're looking for divergences on whichever the indicator on Market Cipher B, whether it's whether it's the VWAP, whether it's the money flow, or the momentum waves, or even the RSI. I don't really use the RSIs, but if you decide to, for additional confluence, you absolutely can. So whatever it is that you are looking for divergences in, it's very important to connect the exact points on the chart to your indicator. So let me give you an example of this. We actually just had a bull div right over here, and I want to show you guys how I would draw this bull div. So here we have the bottom of the wave. So you're going to get your either draw tool or trend line, and you're going to click on the bottom of the wave, right? And draw it to the bottom of the next wave. So this is how you would draw it. Let me make this thicker and bluer for you so you guys can see it. Okay, so that is how you draw your divergence. Now, it's very, very important to draw your divergence, or to consider your divergence. The drawing is just so that you can, it'll help show you. It's very important to draw from the exact same points, right? So you can see this like this dotted line up and down, so you can see exactly where it ended. It's very important to do that. You cannot, for example, do something like this, where it is right now, but then bring this all the way back here and say that that's a divergence. You cannot do this, okay? It has to be the same length, has to be from the same spot, and that's how you're going to spot your divergences, okay? And that goes the same with the money flow, which we'll talk about, and with the VWAP as well. So I'm just going to give one more example. This is not a divergence, but let's just say price came up here and then came down. We would draw it somewhat like this, right? We're going to do it on the money flow right now, okay? So money flow, the peak of it is around here, and it comes down like this. So we would draw it here. Oh, it's hiding behind the wave. Okay, it's going to hide again. Okay, it's going to hide again, but you guys get the point. We would draw it from somewhere here, and then it would be drawn somewhat like that. This would actually be drawn more like this. I like to take it from the exact tips. Obviously, this was money flow, so it's a little bit harder to like find the exact top, but it would be something like this. The point is you grab it from the top of the move to wherever it's diverging. So if this is the highest point of the second like wave up, then you would draw it from the highest point of this wave to the highest point of this second wave, and then you would follow the divergence on your market cipher B. All right. Now, with that being said, we're going to look for a few different divergences and a few different signals. The first concept I need you guys to understand, and I've said it in my extensive market cipher B video, is that money flow is king. And the thicker the money flow, the more consistent divergences happen. So I'm going to give you, this is a perfect example right over here. Okay. Money flow is getting thick in the green, right? We can see it. Oh, what did I just do? My days. Okay, let's go back here. Okay, so money flow is getting thick in the green. As we can see, it's getting thicker, right? When money flow is getting thicker in the green, we're more likely to print more multiple divergences, right? So if you we're on the 12-minute time frame here. If you were to have shorted, this red dot, right? Let's actually pull the replay. You know what? Let's pull the replay. Let's pull the replay. All right, so we're anticipating, anytime you guys see a green dot well above the zero line, the way it is right now, we're already anticipating divergences, okay? We're already ready to look for divergences, and especially if we take the high, right? So at this point, this would be our high. We would draw a line here, maybe set an alert. We know if price can beat this, actually it would be from this red dot here. So it would be right over here. We know if price can come above this line, then we are potentially printing some divergences. And we actually, I don't really remember what happened here, but we're going to find out because we're in replay mode. So in this case, if you were to have shorted right over here with anticipation that this would curve down and you would get your bear div, you would have gotten wrecked. And the reason why you want to filter out which divergences that you're going to be paying attention to, not the reason why, but the way you're going to filter it out is your money flow. So here we have money flow increasing. You don't necessarily want to bet the farm that this is going to go all the way to the bottom. Now, there may be a trade here. There may be a scalp or two. Sorry about that. However, it is not, it's not like a home free divergence there. Okay. So with that being said, now that we know that, let's see what happened, right? So we know we crossed our red line right over here. We remember, as soon as you see the high, we draw it and we wait for divergences. We crossed that line, and now we're going to find out what happens. So let's move next. Okay, so we have our red dot. So if you shorted anywhere of these wicks, right now you're in the green, and then bang. And the reason why, again, you need to be careful of these kind of divergences are because of the money flow. So the money flow is your filter, right? And then I don't really remember what happened. Let's see. So we're starting to get multiple divergences with money flow increasing. And then at this point, now we're starting to see money flow starting to decrease. Obviously, if you're looking for divergences on the 12-minute time frame, you also should be jumping down to the 3-minute to kind of see what's going on, to see if your divergence is going to play out or not. But that's really the premise of it, right? You want to make sure that your divergences are in confluence with your money flow, because remember, money flow is king. So whoever took that trade, you would have made money on that one. And the most powerful divergences that you can spot are the ones where multiple things are diverging. So let's go back to this example. Okay, let's look at our VWAP. Was VWAP diverging? So remember, VWAP is this yellow line here. I'm not sure if VWAP was diverging. I don't think it was. Yeah, no, I don't think it was. But let's just say your VWAP was diverging, which is pretty, I don't focus too much on it, but you know, it's easier to see than money flow. But the important thing is, if you're getting a wave like this, a big wave above the 60 line, and then you're starting to get multiple red dots on this second hump and money flow is diverging, then you are going to be golden. So let me draw that for you. Let me try to, so let's just say money flow was like this thick, right? And then it started to come down. So like this whole thing was colored in, and this was all money flow. So money flow would be diverging and the waves would be diverging. This is a very strong signal, especially on the 12-minute time frame, right? So you want to be looking for that kind of, those kind of divergences. Now, again, the thicker the money flow, the more consecutive the divergences will be. So it didn't play out in this case, but we very much had the possibility. Let me get out of replay mode. We very much had the possibility, so to continue printing divergences. However, price is not actually playing out because the money flow is thick. So let's pretend like we have thick money flow right now, very thick, okay? And we're printing bear divs. It's not uncommon. I need you guys to listen. This is very important. This is going to save you a lot of money, okay? Like I promise, if there's nothing else you listen to, listen right now. It is a lot more likely for market cipher to give you multiple bearish divergences when money flow is thick. So remember, we're pretending like money flow is thick right now, okay? If money flow is super thick and price is doing something like this, we're not betting the farm here because money flow is thick, right? What I like to do is wait for the third one. Okay, 3 divs in a row, you're starting to get really, like this is starting to be a very powerful signal, even if the money flow is thick, because that's where you could potentially catch the peak of the money flow. However, if you're only getting 2 divs and money flow is thick, again, there could be a trade there. There could be a scalp there. You'd have to jump down to the lower term time frames to really decide that. But on the third one, that's when it's like, okay, we might actually be topping out. And guys, remember, like, time frames are all an oscillator, right? So the 1 minute moves fast, the 3 minute moves slower, you know, the 15 moves slower, the 1 hour is like even slower than that. So when you're looking for divergences, what you're essentially looking for are the tops and bottoms of larger time frames, okay? So remember, if this is, we're on the 12 right now. So if this is the 12 and it moves like this, and the 1 hour moves like this, right? A lot slower. Well, what are we doing when we're looking for these divs, right? So if we have like 1, 2, 3, 1, 2, 3, and then maybe something like that. Well, we're looking for the larger wave on the 1 hour, the top of that. And this resides within that larger wave. I hope I'm making sense right now. But yeah, so these divergences will basically live within the larger term time frames in the candle of the larger term time frames. And that's what we're looking for. No one on the internet says that. I don't know why, but that's essentially what we're looking for. Now, the strongest way that you can use divergences to get your entries are by combining what I just taught you in regards to divergences and my 2 time frame strategy, right? So let's reiterate it real quick. Pick 2 time frames, okay? It doesn't matter which 2. However, I need your environmental time frame, or sorry, your execution time frame to be a multiple of your environmental time frame. So what do I mean by that? Let's just use the 12, or yeah, let's use the, we'll make it simple, okay? Let's use the 15-minute. I like the 12, but let's use the 15-minute and the 1 hour, for example. So if the 15-minute is your execution time frame, you're looking for divergences on your execution time frame because this is where you're executing. So when we start to see divs, look, right now we have divs. This is live in real time, right? We have divs right here. So we line it up, right? We have that low. We have a lower low. And this is our divs. And this actually perfect example of a money flow divergence, right? We have money flow. Let's zoom in. I'm going to really zoom in here. We have money flow increasing as price is decreasing. Now, the thing with the money flow is because money flow is the last, is like money flow is the holy grail, but money flow is the last indicator that is shown to you on market cipher B. And by that, I mean like your order of operations, right? Your VWAP is a leading indicator for your momentum waves, and your momentum waves are a leading indicator for your money flow. So because your money flow moves slower than your momentum waves and your VWAP, you don't actually need to catch the exact top and bottom of the money flow when you're drawing it out. So you just want to be looking at the wave as a whole, okay? We have a whole wave. We want to be looking at the wave as a whole. We can clearly see that the wave was thicker here than it was here, yet price has still come down. So that is a divergence. So I like using the 2 hour and the 12-minute time frame, and the reason why is because if you take the number of minutes in 2 hours, which is 120, and divide it by 10, that gives you 12 minutes, right? I like using the 12-minute because a lot of people trade on the 15, and if you're seeing what's going on the 12, then you're essentially front running the 15-minute time frame, so you can get in before a lot of these other people, right? But that's why I use the 2 hour and the 12-minute. So you guys can choose any two time frames, and make it divided by maybe 5 or 10, right? You can use your judgment call. There's no right answer or wrong answer. But I like to use the 2 hour and the 12-minute, and I sometimes like to use the 1 hour and the 12-minute. So the 1 hour divided by 5 is 12, 2 hour divided by 10 is 12. So I really like to make my execution time frame 12 for the reason of front running the 15-minute people. Now, with this exact example, what you want to see typically is your environmental time frame bottoming out or topping out, right? So we want to see it somewhat like down here, or we want to see something printing like it's like your anchor trigger. You're basically looking for your bottom potentially on your environmental time frame, and then you're confirming your bottom using the divergences on your execution time frame. In this case is the 12-minute time frame. Now you can use this in confluence with my second and only other indicator that I use, which is Traders Reality Main, and using the vector candles. I have a complete video on this as well, so if you don't know it, go and watch it. It's a very good video. But this is how you can use divergences and your 2 time frame strategy and your vector candles to essentially time the tops and the bottoms. Now the truth is that these divergences, you see on the 12-minute, we get the green dot after the move, like after a decent amount of the move, we get the green dot. Well, if you come on your execution time frame and you draw out what you would like to see, right? Remember this we had a nice green dot here. As soon as that green dot happens, we draw a line on this low, and we're anticipating a potential divergence. So let's go back in time. If we were like here, right? Price bounced. We're waiting for a potential divergence. We know we're aware of it. So in real time, we would draw something like this, right? We don't know where it's going to land exactly, but we would draw something like that. That's what we're looking for. Now, if we fast forward time, not moving that. If we fast forward time and that sort of, idea plays out, then we know to start looking for our divergence, like I just mentioned, but we can jump down to a lower term time frame. Remember, I like numbers that are like divisible by the larger number, or the other way around. I suck at math. So I would jump onto the 3-minute, for example. And if you come to the 3, you can see very clearly here that we had a money flow divergence, right? Money flow is increasing over time, and the price is decreasing over time. So, that's where you can get your confluence as well to join and enter the trade. And then, of course, obviously you would do your TA and hopefully there's a level there, etc. But this is essentially how you're going to be trading divergences. It's similar concept to swing failure patterns, which I will make a video on. But that's really that's the bread and butter of it. You don't need to know technical analysis for it. Wait for your executional time frame to show you your divs, and with anticipation of your environmental time frame bottoming out. Yeah, and with that information together, you can anticipate on the direction of the market. So right now, what do I think is going to happen? It's probably going to go up because we had some nice 12-minute divergences, right? 15-minute divergences. Let's see, 24, do we have divergences? No divs on the 24, but you get the idea. So yeah, that's how I trade divergences, and that's how you can catch the exact tops and the exact bottoms. It's a very simple thing, and once you get in the trade, put your stop loss below the low, and you know, happy sailing to the upside or to the downside. Everything to the downside is the exact opposite from what I just said, right? Just flip everything. You're looking for divergences with the red money flow, or the green money flow, sorry. But yeah, it's pretty simple. It's pretty straightforward. Stick to the basics. Don't overcomplicate it. Watch this video a couple times back if you need to. And guys, ask questions. You know, I say it all the time, but if you're not in the Discord, come and join the Discord. We got a good community, and I interact with all of you guys. So if you guys have any questions, please come onto the Discord. The link is in the description, and ask me there, and for sure I will answer any questions that you guys have. In the meantime, if you guys like the content, please subscribe. If you made it to the end, I appreciate you. And I'll catch you on the next one. Peace.